Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you're getting some good trades. Did you capture the moves today during the FOMC? That's my question for you. Now, some folks in my Dots trade room captured some of the move based upon the Dots levels. When the market made a move over and broke the New York open session line, this opened right here, it made a nice push down to about the sell target 2 level and then pushed further down below that. And I often have folks asking me, how can I capture more of the pips down below? Well, there's a couple things you can do. One is to stack the levels. You can actually take the distance from the sell entry to the sell target number 2, that being 30 pips, and add it. So you could have actually dropped a line down here. If you were with me today in my Dots trade room, I shared with folks in the room an additional technique based upon what the market has already done. This is a technique that I picked up from a bank trader a few years ago. And I want to share with you what you do in an instance when it's high volatile market. Because the Dots indicator is an excellent indicator looking at the normal price range and looking at the price range expanding or contracting as the market moves. But when we have a high volatile announcement like we did today, the FOMC coming out, the market was looking for a dovish statement, but we got a bit of a surprise today. The FOMC ends its monthly bond buying program and hints at raising interest rates here in the U.S. starting in 2015. And this is a bit surprising, especially given their recent poor assessment of the U.S. economy. Now they're flipping the coin and saying, well, things are actually looking better. Caused the dollar index to push back up towards 86, and we can see here that the euro dollar took a dive down. Let me show you what you can do when it comes to these big announcements. You want to look at yesterday's high and low. So the blue line represents yesterday's high. The red line represents yesterday's low. And what you're looking for is the market to break beyond those levels, and keep it real simple. If you take the distance top to bottom, just simply take that distance. You can click on your crosshair if you're using MetaTrader 4 and take that distance. That distance is about 80 pips. We'll take about 25% of 80, and that's about 20 pips. Simply put that 20 pips up and then look at a 50%. That's about 40 pips up. And now we can see today that the euro had already pushed up to yesterday's high from the New York session here. We can see a push up. But the market during the FOMC, we had expected a potential push higher, but that's not what happened. I mentioned to folks in my trade room, look for the market to potentially break above this level if the statement is dovish, and look for these targets above. And that would have been above the buy target number 2. Well, in this case, it's an upbeat, hawkish tone from the FOMC. The market drops down, and I had mentioned to folks in my trade room, if nothing else, attempt to catch a move below yesterday's low and then look for these targets. Again, about 25% of yesterday's total move or range, and then about 50% of yesterday's range. Let's take a look at the pound dollar. The pound dollar's made a strong move all the way back to the 160 level, and it actually went beyond levels that I had thought the market wouldn't go beyond today. I thought we might get down here about 60-40, maybe 60-20 and sit there, and now that we'll see the market all the way down to about 160. But interestingly, I had mentioned that when I have Dots levels and a calculated target pretty close to one another, that is strong confluence. Look for the market to go there, and sure enough, a nice trade going beyond this level and on down. Look at the Aussie dollar. Now the Aussie dollar, very strong move back the other way. Earlier today from the New York session, it had pushed up and it hit the buy entry level, pushed up a little bit higher and fell back over. As a matter of fact, this morning in our trade room, we were trading this up, and we traded up from about that 88.90 area and traded it up to the buy entry level, looking for the possibility of a move up further, but it didn't. It fell back over. But during the FOMC statement, it really made a strong move back right to yesterday's low and then came within 3 pips of hitting that target. So again, we take yesterday's range, take 25% of yesterday's range, add it above, subtract it below as a target. Take 50% of the range, add it above as your second target, and subtract it from yesterday's low as your second low target. And then here's another one. Look at the Swissy, very strong move, and this one right on the numbers. It came down, tested yesterday's low, pinned into it, didn't close below it, and then during FOMC made a strong push up and almost to the numbers. Look at this first move all the way up to about that 95.43 area. Again, yesterday's range, high to low, 25% of that, then 50% of that added above yesterday's high, and the market went right to it. Now, there are going to be times where the market's not going to move to these targets. For instance, today we saw before the FOMC, the market already moved down to that 50% of the range. During the FOMC statement, the market pushed back up, but that's a sizable move here. The market had moved back 103 points. Now notice that it only has a 5-day average daily range of 68 points. So almost, not quite, but almost double the move here. And notice what it did. It went back to the midpoint of yesterday's range, bounced back off of that, and sitting at about 25% inside yesterday's range. So again, long story short, when you see the market make a strong move beyond the dots levels, and for those of y'all using the dots levels, you can do one of two things. Calculate the distance beyond the sell target number 2 as the same distance to the sell entry in this case. Now if it was on the buy side, you would simply take that distance, 29 pips here, and you would stack it above. And that would help you identify a potential target out there. Another way of doing that is looking at yesterday's high and low and take 25% of that range above or below and take 50% of that range above and below, and these calculated levels are often hit. Now for those of y'all who don't have the dots indicator, you might want to go over to www.compassfx.com/dots, learn more about the dots. And the next time we have a volatile announcement like the FOMC interest rate announcement, or any interest rate announcement for that matter, a GDP announcement, or maybe an employment announcement like non-farm payroll, take a look at yesterday's high, yesterday's low, and do some calculations to find a high probable target. Well, this is Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.